Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, August 14th, 2009. Well, folks, as we get into it, we are seeing a little bit of a nice solid down day on Wall Street today. The Dow is down about 130 points or 1.38%. The Nasdaq is down 35 points or 1.75%, and the S&P 500 is down about 14.5 points or 1.43%. Now, the key here, folks, is this. You saw some ugly selling early on heavy volume on this Friday, but since then, really the volume has started to lighten up, and what you're seeing generally is a sideways to uptrending market off that decline in volume. We always preach this to our premium guys. Most of you guys have been with us or are currently with us, and you guys understand, especially from watching these free videos, that when you get a light volume day in the Friday in August, generally the lows will be put in around that 10:30 time frame because that's when volume starts to lighten up. And sure enough, you can see the hard drop here, monstrous drop on the candles, really a 1, 2, 3, 4, 5 bar surge to the downside. And then right here into 10:30, you kind of put the lows in right here. You actually dip a little bit more, and then you just kind of retrace and get back above that 99.75 level. 99.75 level, as you can see right here in this pink, is a major level we pointed out to our premium guys in the nightly videos in the research center as well as in the chat room, along with the 100 level, which was a key level. As you can see, the 100 level, which is the dotted line right here, look at how many pierces it took before it could break below it. 1, 2, 3, 4, 5, and 6, and then on the 7th candle, it closed on it. 8th candle broke down, and we made that new low, but then we started to bounce back up. The interesting thing here that I want to point out is, remember, I always preach here, and we always do it in themoneystocks.com, is that broken support becomes resistance on the upside. So this was support at 100. Look at how many times it had to hit on 100 before it broke back above. So this line was a very firm line in the sand at 100 on the SPY, and we're looking at the intraday 10-minute chart, by the way, of the SPY. And then once we got below, you hammered once, twice, 3 times, 4 times, and then finally broke up after that. And you can really see how the resistance and support levels really work in tandem here to bring you the best levels to understand the markets during and while trading. Now, you had a nice little uptick into the 20 moving average. You had a nice reversal candle, then a nice reversal to the upside, and now you're kind of just stalling out. And the big question in my book is going to be, as volume gets lighter and lighter on this Friday afternoon, are we going to see the markets tick up like we usually do? Now, that's been a normal occurrence, folks. Look at yesterday. Big sell-off early on, and then a major reversal, and the market basically ended at the highs of the day as late-day volume just died out. Look at the volume over here dying out into the close. The market's pushing right up into the close. That's been a normal occurrence. If you go back even the day before, look at this surge into the close, and there you have it. That was on Fed Day on Wednesday and so forth. But you still have that same mentality in the market, folks, where there's a lot of money on the sidelines that is still trying to get in, and that's why you've been seeing these runs late in the day on light volume. It just takes 1 or 2 or a few hundred buyers there of small size, and you're going to see this market just go right up. Now, the question is, are we going to see a cease to that? Is it going to stop happening? And that's really the million-dollar question, let's be honest. The market obviously is overbought in these scenarios. The question is, do we see mutual fund money still flow in next week? Are we going to see it today into the close still flow in? All this kind of stuff has to be watched for. Now, on the downside, guys, I alerted my premium subscribers of In the Money Stocks Research Center and the chat room yesterday that there were some major things going on in yesterday's charts, and I want to talk to you about how they played out. Number one, we talked about a monstrous level. There were 2 levels I highlighted on the downside that if you took out one, you would go to the next one. If you took out that one, you would go to the lows of the day down towards this 99.50 level, 99.75 level. Sure enough, what were they? This yellow trend line, I want to show you this because this is educational again. I really want you guys to understand it. But if you go back and take the low here, all right, look at the low from Wednesday. All right, you have the low on Wednesday connected to the lows on Thursday, right here to here and to here, and then it goes right through this level here on Friday today. Now, we came down in this one candle, and the tail of that touched it. Now, I pointed out to our premium guys yesterday that you had to watch that level, guys. Very, very important level to watch. If that got taken out, you'd have to watch for the 100 spot 50 level after that. So once we took out 101, which is right where this line was, the next line in the sand was 100 spot 50. If you took that out, the market would remain weak for a good portion of the day, if not go even lower. Sure enough, once you took out this line right here, this yellow slanted line, that was the first signal in the sand. You came down to 100 spot 50. You actually took that out right here, and then the next sign was a move down to this 100 spot 70 to 100 spot 50 level right down here at these levels. Now, what you saw here is the completion of a trade going off there, where once you got to in that range, the support levels became very, very important and very much in play. And that's really where we've been hovering here around the rest of the day. Now, again, the big question that everyone needs to watch for, you want to watch for change in character here. Are we going to see continued change in character? Are we going to see a continued float up, which wouldn't be a change in character, where the light volume in the afternoon on a Friday just lifts this market right back up? Or are we going to see new lows made this afternoon? That's all key things you have to really be watching for here and really want to understand. Now, the key levels worked out beautifully on this chart. We also talked about resistance. Look at this triple top. One top, two tops, three tops. We also touched it this morning before selling hard. That was a major resistance we had pointed out as well, and you have to be watchful of that. That was at 101.60. We could not get above that. That's a dead indicator this market was stalling out there and going to fall as well. And once you fell off that level, pierced this line, took it out. That was going to the next level, pierced it when we were going to go to the next level down here. Now, really what you're waiting for is a confirmation double bottom at around 99.50 to 99.75. That will be a lot of support there at 99.50 to 99.75 and should be watched very closely. If we take that out, well, guess what? That's going to be in the premium video tonight. We're going to talk about those levels in case we take those out. What's your next one to watch for? How low could we go? Or are we going to just rebound next Monday on a light volume Monday in late August or mid-August and go right back up to the highs again and can start to just kind of trade higher again? Because that's really been the motto. I mean, let's be honest. Every pullback's been a buying opportunity over the last 6 months since March lows. So keep that in mind, that you have to respect that, but at the same time, you have to also look. And one thing I harped on in yesterday's video to the guys in the research center and in our chat room is that the data actually the last couple days has been very, very ugly, folks. You got jobless claims yesterday and retail sales, not pretty on either one of them. Walmart kind of saved the day, although Walmart missed on revenue. Missing on revenue is not good, folks. All it means is if you beat on earnings but miss on revenue, that's telling you that it's just cost cutting that's doing the work. There's nothing more than just cost cutting, and that's not good because you have to have growth in the future. Eventually, the costs are cut as much as you can, and there's nothing else to cut. So that is a problem. Now, granted, the market still cheered the Walmart earnings and pushed the stock up. I think it's a short-term push-up, in my humble opinion, right now. So we'll continue to watch that and continue to start to analyze all and everything that's been going on here. Now, last but not least, what I want to touch on here, folks, is also the data from today. We had the Michigan sentiment. Not very pretty on that Michigan sentiment. Really started to cascade to the downside once we got that out. You're just not seeing the continued signs. Now, my big issue here is also China. The Chinese stimulus has basically been used up. That was creating artificial demand for their products over there. Now, if the stimulus is all used up, then they're looking towards the United States to be purchasers of their products. But the problem is the retailers here, the individual people here in the U.S. are just not purchasing. Let's be honest, the retail sales showed us that yesterday. So there's a lot of humps here, a lot of mountains we have to climb over if this market's going to really continue higher. Right now, it's just been kind of stupid money going into the market at these highs, but the question is, can that last, and will those people end up getting smoked like they did when they were buying in late 2007 thinking we were going to go even higher? Talk to you soon, folks. Come join the Research Center. Come join the intraday stock chat. We look forward to having you. Have a wonderful rest of the day. Take care.